In this video, I am going to introduce you to the management accounting. This is the CIMA definition for management accounting. The application of the principles of accounting and financial management to create, protect, preserve, and increase value for the stakeholders of for profit and not for profit enterprises in the public and private sectors. You are not required to remember this definition for your exam. Just have the understanding of what management accounting means. This section here, this means all the organizations. We discussed about different types of organizations under BA1. If you can remember, organizations can be divided into for-profit organizations and not-for-profit organizations. And also the organizations can be divided into public and private sectors. So in this definition, they considered all the organizations. Now let's discuss about the International Federation of Accountants, IFAC, definition of the domain of the professional accountant in business. This is not necessarily for the professional management accountant, but this is for the domain of the professional accountants. You need to have an overall understanding of this definition. Again, you are not required to remember these definitions for your exam. So don't waste your time remembering these definitions. Just have the overall understanding of these definitions. The generation of value, interpretation of information to management for decision making, performance measurement and communication, cost determination and financial control, the reduction of waste, risk management and business assurance. This is the domain of the professional accountant in business, defined by the International Federation of Accountants, IFAC. Now let's discuss about what is a management accountant. A management accountant is a professional who specializes in providing financial analysis and strategic advice to organizations. They are responsible for developing and maintaining the financial systems that enable an organization to make informed decisions and achieve its goals. Management accountants analyze financial data, identify trends and patterns, and use this information to help managers and executives make decisions about resource allocation, budgeting, and investment. They are also responsible for ensuring compliance with accounting standards and regulations and for maintaining the accuracy and integrity of financial data. As we go through the topics for BA2, you will have a better understanding of the role of management accountant because we are going to discuss about many topics that will come under the role of management accountants such as investment appraisal techniques, budgeting, forecasting, decision making, controlling likewise. There is a main difference between management accountants and financial accountants. You need to have a clear understanding of what is this difference is. The main difference between management accountants and financial accountants is that management accountants focus on providing financial analysis and strategic advice to support managerial decision making, while financial accountants focus on recording and reporting financial transactions to external stakeholders. So, the financial accountants mainly focused on recording and reporting the past financial transactions, whereas management accountants consider both past and future financial transactions, forecasting and budgeting under the management accounting. So, this is the main difference. There are few key differences between management accountants and financial accountants. Let's go through them one by one. Focus. Management accountants focus on providing information and analysis to help managers make strategic decisions, while financial accountants focus on recording financial transactions and preparing financial statements for External stakeholders. This is really important. Financial accountants prepare financial statements for external stakeholders, whereas management accountants prepare financial and non-financial information for the internal stakeholders, such as for executives and directors. Time horizon. Management accountants typically look at both past and future financial data to help managers make decisions, while financial accountants focus mainly on past financial data. This is also really important. Financial accountants will focus on the past financial data, whereas management accountants will focus on both past and future financial data. Reporting. Financial accountants are primarily responsible for preparing financial statements for external stakeholders, while management accountants prepare reports and analysis for internal stakeholders. We discussed about these. External stakeholders are the investors and shareholders. This also can be the government or the general public. Internal stakeholders are the executives, directors, managers. Regulations. Financial accountants must ensure compliance with accounting standards and regulations, while management accountants are not typically subject to the same regulatory requirements. We will discuss about the compliance with accounting standards and regulations under BA3. Scope. Management accounting can be more flexible and cover a wider range of financial and non-financial topics than financial accounting, which is more focused on compliance with accounting standards and regulations. This means financial accounting is strict to standards and regulations, whereas management accounting is more flexible and cover a wider range of financial and non-financial topics. Now let's discuss about the positioning of the management accountant within an organization. The positioning of the management accountant within an organization can vary depending on the size and structure of the organization. In general, management accountants are part of the finance function within an organization and may report to the Chief Financial Officer (CFO), the finance director, or the financial manager. Regardless of the reporting structure, the management accountant plays a key role in supporting the decision making process of an organization. They provide financial insights and analysis to help managers and executives make informed decisions and achieve the organization's objectives. Now you can understand the role of management accountant. Management accountant is directly involved with the decision making process in an organization. Now let's discuss about the CIMA's role as a professional body. The Chartered Institute of Management Accountants (CIMA) is a professional body that represents management accountants worldwide. CIMA's role is to support its members and students in their professional development, promote the profession of management accounting, and contribute to the society by fostering responsible and ethical business practices. Overall, CIMA plays a key role in supporting the development of management accounting professionals and promoting responsible and ethical business practices in society. By providing training, education, and continuous professional development (CPD) schemes, CIMA helps to ensure that management accountants have the up to date skills and knowledge they need to support businesses in achieving their goals. This CPD scheme is very important when it comes to CIMA. This is the Continuous Professional Development Scheme. This means when you complete CIMA exams and become a member of CIMA, you will still have to update your knowledge and skills about the business and finance. This means you have to continuously upskill your professional knowledge. Now let's discuss about the CIMA's role for members, students, profession, and for the society. For members, CIMA supports its members by providing professional development opportunities such as training and continuing education to help them stay up to date with the latest developments in the profession. CIMA also provides networking opportunities for its members to connect with the other professionals and build their professional network. For students, CIMA provides training and education programs for students who want to become management accountants, such as you. CIMA's qualifications are recognized worldwide and provide a pathway for students to become fully qualified management accountants. For the profession, CIMA promotes the profession of management accounting by raising awareness of the value of management accounting and the role that management accountants play in supporting businesses. CIMA also works to set professional standards and best practices for management accounting. For the society, CIMA is committed to fostering responsible and ethical business practices. CIMA encourages its members and students to adhere to ethical and professional standards and supports initiatives that promote sustainability, diversity, and social responsibility. Now let's discuss about the areas of management accounting. This is a very important part because these are the topics we are going to cover under BA2. Management accounting is a field of accounting that provides financial and non-financial information to management for decision making purposes. The main areas of management accounting include cost accounting. Cost accounting is concerned with the determination and control of costs, both direct and indirect. It helps in determining the cost of products or services, identify cost saving opportunities, and improving profitability. We will discuss about costing in the next chapter. Budgeting and forecasting. Budgeting and forecasting involve the preparation of financial plans and estimates for future periods. This involves the use of historical data, market trends, and other relevant information to project future performance and help management make informed decisions. We will discuss about budgeting in the third chapter and forecasting in the fourth chapter. Performance management. Performance management is concerned with the measurement and evaluation of the performance of individuals, departments, and the organization as a whole. It involves the use of key performance indicators (KPIs) to measure progress towards goals and objectives. Decision support. Decision support involves the provision of financial and non financial information to assist management in making informed decisions. This includes analysis of alternative courses of action, identification of risks and opportunities, and evaluation of the potential impact of decisions on the organization. Strategic planning. Strategic planning involves the development of long term plans and objectives for the organization. Management accounting provides financial and non financial information to support the development of strategic plans, including analysis of market trends, competitor behavior, and internal capabilities. Risk management. Risk management involves the identification and evaluation of potential risks to the organization and the development of strategies to mitigate those risks. Management accounting provides financial and non financial information to support risk assessment and management. I hope now you have a better understanding of what is management accounting and what is a management accountant, and finally the areas of the management accounting. Let's discuss about these topics in later chapters. Thank you for watching. See you in the next video.